One corporate voice to another, Ideaforge in the spotlight. Ankit Mehta is with us. He's the CEO. And we've also got the CFO, Vipul Joshi, joining in to talk a little bit more about the quarterly performance. Thanks so much, gentlemen, for joining in. Let's get in a take then first up from you, Ankit, as to what the outlook is when it comes to your overall numbers, because it seems that on all metrics, apart from your revenues, it has been a little bit disappointing. What has led to this, and do you think that the sluggishness will continue into the coming quarters, in particular when it comes to your margin picture as well, that has come at 20%?
So, this is something that we have iterated over all our previous calls as well, that our performance is very challenging to look at from a quarter-on-quarter or year-on-year quarter basis because of the nature of our business and the variability that happens due to delivery commitments that we have. Therefore, if we look at it more from the annual basis, you will see that that's a relatively more holistic comparison, along with, of course, all the efforts that we put in developing new technology and new products and new business cases and new markets as well as we go into the future. So I think that is a more holistic comparison, because Q on Q comparison, it really isn't really any trend or any sort of market factor that is responsible. It's mainly the commitments that we have on our deliveries and contracts that we have to play out.
Let's say FY23, and if I look at FY24, I look at the year-on-year number also. On your base, given what your historical track record is, the base seems to be kicking in. I mean, the growth seems to be plateauing. It's not at the historical growth rate.
So again, I think this industry, in that one sense, right, it is at a place where it is going to grow quite rapidly in the next few years. And what will happen is that revenue versus orders that the industry receives versus what is brewing in terms of the adoption that's going to happen in this industry, all of these are going to have slight lags from time to time, and those lags have to be accounted for when we look at a nascent industry. Tracking it very, very closely year on year or otherwise, it's not going to be very straightforward, because you may see that some of the things which were brewing will convert very quickly, and then you will see an upside. So that approach of sort of suggesting that there is a trend here is, I think, very early for this nascent industry. And therefore, we will see a lot of the growth of the industry pan out over a period of time.
I want to get you in on the conversation as well. And, brokerages have raised concern that your order book has been shrinking over the last 2 quarters, and that might impact your revenue visibility for FY25. What do you have to say to that?
So, while, we have also been iterating that, our order book is right now at different stages at the time of when we are in a different phase of the quarter. We are also doing the billing in the year, and hence the differentiation in the order book numbers that you see. We also enumerated in our earnings call that we are also right now tracking a healthy L1 pipeline, which is about roughly 300 crores. And addition to our 125, which is already part of the order book, we are closely looking at all the movements that are there in the market at the moment. And we are hopeful that we will continue to grow in the coming year as well.
What is the right metrics of looking at the company? Since it's a newly listed company, limited history, it's a nascent company, very different sector, order book is not the right benchmark, then what is the right benchmark to understand which way growth is moving?
One is, of course, the fact that there is, order booking, the opportunity pipeline, the pace at which the overall industry is growing, and as well as the new markets and new use cases and opportunities that we are unlocking. So like Vipul mentioned, we are tracking a good, healthy L1 pipeline, which implies that there are certain contracts with visibility of where we are perhaps the only, competitor in the reckoning. And then there are other, contracts which are near to getting into that stage. So there is a fairly healthy pipeline that we track as far as opportunities is concerned, and that pipeline has conversions, and those conversions happen at the pace at which the business or the industry moves. Apart from that, if you look at the initiatives that we've made in the US in terms of business diversification, the initiatives that we are doing with respect to drone as a service, again, are very important initiatives that will add into our revenue in the medium to long term. And they will have significant contributions. In fact, the US presence has been particularly very interesting because it has also helped us unlock opportunities in markets other than the United States. So there is a lot of traction that gets built when we are present in certain markets which are critical for the industry that we are in. Apart from that, we are also looking at building new platforms. So we have a couple of new large platforms that are under building. We are doing live testing on some of those platforms. Some of them are in the phase where we are doing the detailed concept and engineering design. So a lot of that holistic traction is what's going to lead to the long-term growth of the business. And we are very ambitious, and we are tracking and planning to grow year on year as well. And that's something that we are going to continue to track and pursue, because many of these strategies have in a way kickstarted post our listing. So we will see that the strategies that we have enumerated for ourselves will take that minimum gestation period to get into the visibility around revenue and order.
Vipul, can you give us a sense of new client wins? Maybe that is in benchmark. In last 12 months, how many new client wins you've had, and how many new client wins do you think you will have in FY25?
So, see, we have not been tracking the exact metrics in terms of how many new clients, because there has been a lot of trust that has been shown by the older clients who have been giving repeat orders to us. And their requirements over the years have also evolved and matured as well. So that wouldn't be the right metrics to track in terms of how many new clients, because it is also the size of the contract that have been changing with the similar set of clients as well over the years. And if you see our current year, we have also improved over the civil side of our things, and that is what has been our effort over the years as well. That how do we de-risk from a defense side of things to also improve on the civil, and those all procurements have now started maturing. So you can say that is one of the tracking mechanisms to look at the company, where our civil is probably the largest contributor this year, which basically has improvised.
Also, just to sort of add to what Vipul is suggesting, is that we will have a very, very strong growth within our key customers, because the key customers have experimented with the systems. They've made these systems a part of their operations, and some of our equipment are standard issue for them now. And therefore, we will see a lot of growth in those customers, and those are large customers for us, where that growth is important. And those segments are actually already large potential segments that we are growing into in terms of market penetration present.
Thanks for joining in and sharing with us that view and an outlook on how the business is shaping up. Okay.
If you like this video, then like, share and subscribe to ET Now.